We got to look ahead to FedEx. The thing I want to really start off with, we know that they're cost cutting. We're going to dig deeper into that, but the estimates right now. So the estimates have revenue falling about 4%, but profit falling about 40%. That's the consensus. Your B of A estimates are just about the same. What does that say about this company and what people think about this company?
Well, you've got a fixed cost network, right? And that's the huge problem and overhang for FedEx has been how do we align that with volumes falling, right? So volumes are down close to 10%, double digits. And so the problem with FedEx in that kind of fast and moving environment, shifting from a COVID where everything was order at home and stay at home and get more goods to now a more normalized environment. But, you know, they've got to react and they were a little slow to react in cutting costs. And even before then, they needed to structurally pull some costs out. We had a change of management about a year ago, and so now we're seeing kind of both sides of it. We're seeing about $1 billion of focus on costs to pull costs out on a cyclical basis, and then they've got a longer-term $4 billion move to pull costs out more structurally. And that's the balance that you want to do with a fixed cost network. As volumes are falling, you've got to act a little quicker, and that's why you're seeing revenues down, as you mentioned, about 5%, but earnings down or operating income down even about 8 times that, about 40%.
Yeah, a really dramatic move there. So, by the way, you've mastered the art of understatement. You said a management change. Founder Fred Smith, a legend in the transports industry, decides to step down. His second-in-command, Raj Subramanian, takes over. It's been a bit of a rocky ride, including this drive transformation plan that, as we just mentioned, cuts worker hours. It cuts flights for its signature express service, where they get about 50% of their revenue. They have an update to that coming up next month here in New York City, actually. What are you expecting to hear on the conference call about this cost-cutting plan that's in the billions? How much progress do analysts like you and you think investors need to see during this quarterly call?
That's a great question, right? I think the question is how much you've done a couple things to move it along fast, right? They put a hiring freeze in starting last June. If you think about 10,000 open positions, that could be about $400 or $500 million of savings right there that they could pull forward that they've been talking about. You mentioned the directors and officers cuts by about 10%. That could be another $60 million. So you're talking over $500 million of savings toward that long-term goal of $4 billion. That's outside the cyclical, right? The cyclical is the parking aircraft you mentioned real quick there, the purple tails that they've been doing through post-peak season, getting that shut down real quick to align with where volumes are today. That's the cyclical nature. The structural is really, can you pull some of that forward? And I think that's why when you look at earnings down 40% year over year, any upside surprise would be that they've gotten those costs out of the system even faster. And that would be key to what investors are looking for in the quarter this afternoon.
All right, Kathy, the big question a lot of investors are wondering, where do you stand with this stock? Is it a buy? Is it a sell? Are you neutral? And would you buy ahead of the print right now? Because certainly there could be a big surprise or there could be a big letdown.
Yeah, you know, we did upgrade this a little while ago on the cost cuts, right? I think this is something that you mentioned, the management change between Fred Smith to Raj Subramanian. You know, that is the opportunity. You know, they missed out of the gate after they had an analyst day last June. Then you mentioned the beat that they did. I think now it's about Raj is in place. He's got to put his stamp on the company. We think, you know, some of these moves like the hiring freeze, like the cost cutting, are going to bleed into this quarter. You're going to see that early, and that's going to give you the opportunity to see the credibility being built, the cost cutting that they're getting on, and can give you a real opportunity. So we have a buy on it. We like it into the quarter and think that can give you an opportunity, one of the best opportunities, because you've got idiosyncratic moves here of cost cutting in a weak freight environment above and beyond what some of the others are doing. And that gives you the opportunity to get that upside that could be a surprise there.